Yesterday, I gave you a video in which I predicted the next 3 years' price of Nvidia stock, and that was based on the data that I've put together. And I got to thinking, that can't be that hard. We do it for professional quarterbacks. We predict based on their past history and their current projections of what they're doing and how they're training, what their completion average is going to be. We've been doing it in baseball for years. We know that Babe Ruth is going to hit so many home runs, and that Mickey Mantle is going to do this based upon past history and future projections, and how they perform against different pitchers. We can gather all that data on sports and the weather. Why can't we do it on the stock market? So what I did was go and create an Excel spreadsheet, and I went back and I tracked of the 40 stocks that I'm interested in participating in, because I recognize their participation in AI and accelerated computing and semiconductors. The 40 stocks on the Bus 12, the Bus 13, and the Moonshot portfolio. So I said, okay, if I can look at what their past has done, that is to say, the price of a stock is only made up of two factors, and that is the earnings and the PE ratio. So you multiply their earnings times the PE ratio, and you have the price of the stock. So if I can go back at history and see how those two numbers relate to each other and where they are today in relationship to PE ratio and price of stock, well, then I can probably say, okay, if I'll go far enough out to the end of 2027, those numbers will be pretty accurate on predicting what the price is. I mean, it's crazy to try to predict the price of a stock tomorrow or next week, because you have all kinds of auxiliary events happening: interest rates, inflation, geopolitical. But if you'll go far enough out, you'll probably be pretty accurate. And so, as you can see on the thumbnail, and here, I'm projecting Micron will be at $305.69, which will give it about a 225% gain from where it is now. I'll be okay with that. And you can see what the others are. They range anywhere from a low of about 155% to a high of one of my moonshot stocks. That would be Navitas, that I believe is going to be a 1,150, because it has what Jensen needs for its next level of compute power. It's going to need something beyond what we're using now, and that is silicone wafers. And that's what Navitas is specializing in, changing that wafer from silicon to they got another substance that absorbs heat or displaces heat better, and thus will accommodate the changes that Nvidia and I'm sure Advanced Micro Devices and Intel are going to bring to us into the future. So I see Navitas as one that could give me 1,150. Again, based on past history and future projections. Let me take you to my computer. I'm going to basically revamp and rebuild my cheat sheet. What I want to do is give my tribe members a place they can come on my website and look at any of the 40 stocks that I track and say, what does Kerry believe the price of the stock is going to be at the end of 2024, 2025, 2026, and 2027? And with some level of confidence, how did he arrive at those numbers? Then the other element I want to put in is what I also know is most stocks pull back, give me an adjustment, give me an opportunity to buy. That's technical analysis. That has nothing to do with numbers other than technical analysis, and I get that from my charts. So I also want to include on that cheat sheet to someone who comes and says, I don't own any now, and I'd like to own a stock that's going to give me 191% over the next 3-4 years. So where would be a good place to buy it? And what I do is do my technical analysis, and on my cheat sheet I say, if it pulls back, if and when it pulls back, this is where it will probably pull back to based on the information that I have today, because I update this cheat sheet on a daily basis as information changes. I get information from about 6 different sources, and I analyze that information, and I put it into my cheat sheet to change not only the buy-in potential price, but also when they have earnings calls and they change their projections as to what their future earnings are going to be, I go in and make those adjustments. So I know with relative certainty that Micron technology is not going to end up at $305.69 and give me a 225%, because things will change, okay? And so I will factor those changes into my cheat sheet so that you can come to it at any time and say, this is based on. Now, you can also come to my cheat sheet, figure out how I do it, and then do it for yourself, okay? That's fair. That's fair. Copying is fair. But if you don't have the time to put into this on a daily basis, and if you don't have the money to buy an AI factory from Dell and Nvidia that is supported by Now's software and Google's Copilot, well, then you can use what I'm doing. And when I get my AI factory that I'm going to spend probably $30,000 on, you can have the benefit from that as well. So let's go to the computer and let me show you how I'm doing this analysis. Okay, this is what I've been working on for the last week, and you're going to see that it's actually, as I've gotten deeper into it, it's changed some of the numbers that I just yesterday was saying that Nvidia would go to, particularly on the short term. And it's pointed out some things that I think are pretty easy to understand. Let me put it so that this is Nvidia's at the top here. What I've done is I've gone back to 2009, and I've made record or put the data in as to what the earnings per share were. That's this number on Nvidia, what the price of the stock was, and how they relate to each other. And I think this is a shocker. In 2009, Nvidia stock was $4.29 at the close of the year, went down to $3.53, $3.18, went down to $2.83. Don't you wish you'd bought it then? And so what I'm then doing is showing the relationship to the earnings per share. As you can see here, the PE ratio is 11.8 with a price of $2.83 and an earnings of 24 cents. The PE is 11.8. And so I go through here and I see, oh, wow, now it starts to change. Here the PE actually on a 27% earnings and a price of $26 per share, the PE ratio ran up all the way to 97%, much higher than it has been. And I recognize this is when Nvidia changed who it was. It became something of a gaming stock and started building a following. And we see its price goes up 137%, and its price is at $47.91. Its earnings at 69, and its PE ratio is now 74, 24.35. Jumps in 2000. The PE ratio goes up because the stock of the price of the stock actually goes up substantially, and the earnings comes down. So that pushed that high, and then with a jump in the price again in 2021 from 131 or 130 to 293, again, the PE ratio jumps up substantially, and then it does the same thing in 2023 when we have a price jump from 146 to 495. The PE ratio runs up to 148 PE ratio. So then what I do is I take a average of that, and that's right at 63. And then I say, okay, if we move forward and it maintains that 63 PE ratio, not the 148, but the 63, and then we multiply that times their projected earnings, and this is the earnings that comes from their earnings calls and from Wall Street analysts, then we say that the price of the stock valued today is $814. Well, it's actually just selling right now today at 1,208. So this is really telling me that based on past history, that Nvidia is overpriced, and it should be selling at $814.96. But it's not. So we can learn from that. We're saying then, but based on its earnings at a PE ratio of 62.9 at $27.07, at the end of 2025, it's going to be selling for $17.02. Now, that's pretty close to what I said was going to be in my video yesterday. Again, it's about $500 above where it is today. Then we go again, a 63 point PE ratio times $35.40 a share. And this is what Nvidia is projecting. We have a price of $22.26, and at $41.35 earnings, we have a price of $26.21. So that's how that works. Okay. And that makes me comfortable to say, yeah, I believe this. I believe it's overrun itself. It's out ahead of its skis, so to say, and it could come down to that level. Do I know that it will? No, I do not. That will be controlled by market momentum and things that have no relevance to what their earnings and their PE ratio is. But I do feel pretty confident about these last two numbers. So that's what I'm doing. And you can see I've done it. This is one of my moonshots. I've had to do some different kind of calculation there, but I carried that same type of calculation into SMCI. Again, this is based on where it is right now. It's at $717. I believe it'll end the year at $800. Then I believe it'll pull back. And it'll come back to about 764, but then based on its increased earnings and its projected PE ratio of 22.7, which is relatively low, I think it'll finish 2027 at 1188, which would give you 153% return on your investment based on the price that it is at today. So that's how I've done this. This is Dell. It's kind of surprising to me. Dell's PE ratio is relatively weak. It just gained some strength this year, and that's what I'm carrying forward to give me a potential growth on Dell of about 157%. And then I've gone up here, and this is ServiceNow, as you can see, and this is Micron Technology. Micron's kind of an interesting one. Look at the PE ratios that it had as it came through. Relatively small, showed a loss here. And its average PE ratio, because of that loss, from 2009 through 2020 is 1.5. Pretty dismal. And now it's picking up. And again, I'm going in with a PE ratio based really on what it did just this last year in 2024, because it had such a bad history to base it on. A 17% PE ratio I don't think is accurate. So I'm using the 47, and I'm estimating it will go from a current price today of 130 to 305. So that's how I'm doing this. And again, I will work on this more. I will integrate this to my cheat sheet. We'll talk about this actually tomorrow, which is today, because this video will come out on Friday. We'll talk about this more on our Stock Talk. If you want access to this sort of stuff, you need to get on the bus. And if this kind of information can make you $60 a month from this point forward, which I think it can, because I don't know where else you can go to get inside. I mean, this is what they do on Wall Street, but they don't share how they do it, okay? But I'm sharing how I do it, and then I'm updating it on a daily basis so that it's reflective of what happens today. And then, as I said earlier, I'm going to take this all the way to the AI factory that I'm going to spend a bunch of money on so that this is all done by a computer, an accelerated computer, so that all the information that comes out on every morning I have access to from on any of the 40 stocks that I have, and that number will grow once I have a computer doing all the work for me. So I'm Kerry Grinkmeyer. I'm a retired financial advisor, and I get a lot of satisfaction out of digging into this and trying to figure it out and trying to help people. I had one of my tribe members yesterday said, I made 5% yesterday on what you have told me to do. Thank you. And that's my objective. That's my objective, to get you to make 5% in a given day and then not lose 5% the next day, maybe make 3% and let this thing grow. And I think with the data we have available to us today, as I said, as a financial advisor, I had none of this because it wasn't available. And if you think about what this accelerated computing is going to do, it's only going to get better. And if you understand it, and you can use it to help you make better investment decisions, this is your ticket to financial freedom. All right, I'll talk to you again tomorrow. That'll be Saturday, I guess. And we'll see if we can't figure this out even more.